Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, July 19th through Friday, July 23rd, 2010. What a wild week last week. Again, the beginning of the week starting with a nice rally, then we had a couple flat days, sideways days, ultimately a massive sell-off on Friday, caused again mostly by options X, but it's a mix of options X and reality hitting the market. And I want to explain what's going on here. All right, now as you're seeing here, the Spider's daily chart is before you. You can see clearly that again, if you go back right here, which was the 12th, and then again here was Friday. So this was Friday, this was Monday. You had a gap up on Tuesday, sideways action on Wednesday and Thursday, and then a massive sell-off, wiping out all the week's gains and turning this market negative for the week on Friday. Now, what was the cause here of this move down? Essentially what you saw here, folks, going back as much as 2 weeks ago, going back to really after July 4th, Monday was closed on July 5th, and then we had July 6th, the market opening here. The rally began and with a vengeance, and that was really the key here to understanding what was going on was options X. Understand options expiration, folks. Everyone going into, look at this big move down prior to options X, a couple weeks before options X, was massive selling. This is amateurs all throughout the sell-off. Amateurs are picking up puts. All right, puts again, betting against the market there on the options side. And what happens is all the institutional players are selling those puts to the amateurs, to the retail guy, to the traders, to every average person out there. And again, what's going to happen there is there's no way these institutions are going to take a loss on that. So as the market falls and these puts become more and more in the money and people are making more and more money, they have to reverse them because what they want to see, folks, is these options expire worthless. And to do that, they have to force the market up. So going into the last couple weeks before options X, this was going to happen. This happened last month, believe it or not, as well. Take a look at this. Here was your big sell-off. And right here, here's options X over here. Right before options X, about a week or two before, the market surges higher. Same thing again this month. So it's a repeating trend that you have to be aware of. Whenever you see a massive sell on the markets going into a couple weeks before options X, really about 2 weeks before the options X Friday, you have to start to look for a reversal. Same thing with the upside. And it's not just to the downside. I want you guys to be clear on that. We're talking about if the market were to rally tremendously for a month or 2 to 3 weeks before options X, you want to start going into those final 2 weeks before options X, look for a reversal. Too many people would buy calls, and then again, the market's going to reverse as the institutions pull that market back. So remember, they're selling these options to people, therefore they're making a premium. If those options are excessively in the money, they're going to have to pay out those options and take a loss on the position. They're never going to do that, folks, let's be honest. Therefore, you're going to look for the market to reverse. So again, look at the rally going up into that final options X. You really pushed it up. Then you went sideways for really the Thursday and Wednesday and Thursday period. And then ultimately, once you get to Friday, it's done. The institutions don't have that much reason to hold the market up anymore. And sure enough, look at the sell-off we saw. Literally, we wiped out a week of gains just like that on Friday, with the markets getting absolutely demolished. You had the Dow down 261 points, NASDAQ down 70, S&P down 32, basically 3% drop across the board on Friday, wiping out any gains from Friday, even going back even further, again, from the week. So here you see the Friday's move down. It goes all the way down here. We close at 106.66, which is kind of interesting. Notice the 666 number, 106.66. A little bit of a devilish type twist to the market, a little bit of a manipulation type twist towards the end of the day. And again, ultimately, here's Monday, Tuesday, Wednesday, Thursday, and you wipe it all out and close basically back below Fridays of the previous week's gains. All right, now let's go to the intraday, and I want to talk a little bit more about it. We're going to flip to the intraday. What I thought was so fascinating about this whole options X, it played out perfectly. And again, I utilized it to buy going into our turn date, which again, if we go back to the daily quickly, our turn date was right here for a market to move up. We had a massive rally. Then we had a minor turn date on Friday, which was this last Friday right now. The market sold off, which was exactly what we expected. I had some nice positions in SDS, which is 2 times short the SPY or the S&P. And again, I already sold half of that position. Now I have a break-even stop on the rest of it, and that's what I'm really looking for. So again, based on the turn dates, based on the key calls, you're making money hand over fist on the swing trades in the research center. Can't stress that enough. You want to be involved in that research center at InTheMoneyStocks.com. So many avenues to make money in there. It's not even funny, folks, for $49.99 a month. Unbelievable. In any case, The other thing I thought was fascinating, folks, about this daily chart before I flip to the intraday is, again, connecting this pivot high through this pivot high. Not only did you have the 50 moving average as a resistance point, but you had this one sloping down. That really kept the market from being able to break out. And I was talking to my members about this in the chat room and the research center, saying how not only do you have the 50 here, but even above the 50, you have this trend line, you have this trend line, and the 200. Going to be very hard for this market to get through without a pullback after such a big rally. And well, now we have the pullback. Now, do I think this market's going to new lows? No, actually, not yet. Eventually, yes, but we're not talking about that yet. I think you're talking about a little bit of a pullback. We already got a majority of that pullback on Friday. You could get a little bit more, obviously, but ultimately, I do think the market will have a bounce off this and could come up and test this 200 moving average. Is a very, very good possibility in the not too distant future. But again, first, there could be a little bit more downside early on, a little bit of weakness, a little bit of fear ultimately in the market. Now, going back to the 10-minute chart here, folks, what else do we have to look at? As you can see, the constant selling, and this was really the key catalyst, folks, and I want to point this out. On the intraday portion of the video here, just talking about what happened intraday on Thursday, it was the biggest manipulation you've ever seen and a good culmination to the end of Options X as we went into Friday. Here you saw the massive sell-off. The market tried to dump insanely on bad economic news. Earnings were just not that great this week, frankly. And the market dumped out on Thursday all the way down here, but then slowly as volume lightened up, notice the volume, the market was able to go sideways, and then all of a sudden, as if it was choreographed, and again, it was choreographed, folks, don't be fooled here. BP news that they closed off that cap, and Goldman Sachs settlement with the SEC for $550 million was announced right here that there was going to be that key news data. So ultimately, the market caused a massive rally. Do not think, and I want you guys to realize, this right here, don't think this was just a random occurrence. It is not random. If you think it's random, you're fooling yourselves and you're going to take losses. The market is a game to these institutions. They have it all planned out, as well as the PPT plunge protection team. And you can see right here, going into Options X Friday, they said, no way are we going to let this market really end lower today. We're going to make sure we make a majority of those options expire on the worthless side. Let's run this market up. Plus, you figured on this rally, a bunch of amateurs bought calls thinking, oh, maybe it continues on Friday. I'll make some easy money. Not so fast. Runs up into the close, takes care of all those really end of the period puts and get some call buyers on board, and then you reverse it and take all their money on Friday. Beautiful little setup there. Understand that this is all contrived. This is all planned out, folks. This is not a random occurrence that Thursday, late in the day, after, right before Options X, Friday, this was what happened. Okay, now again, as you saw, market just gapped down and just sold. A little bit of a bounce as we came down to the 106.50 level. That's a key level. If we go to the 60-minute chart here, I want to show you a couple other odds and ends. Look for support next week. If you come down a little bit further, there's going to be very good support at 106, and then ultimately there's going to be a major level of support right around 104.50 to 105. That's going to be a huge level and a possible sticking point. If the market got there, I would slightly be interested in a long position in some various stocks out there that have sold off very sharply. Again, for those of you in the research center, should I take a long position? I post it immediately as I'm doing it, and I'll send out the alerts, text or email alerts, or you can just check the hot charts and alerts. Also, follow that Pro Trader watch list. It continues to be spot on and continues to really be the direction that all our traders are looking for things in the market. All that's included in the research center, folks, for $49.99, a slam dunk deal. Now, next week, folks, I want to just be clear on this. What else do we have? Economic news is going to be pretty sparse, but we do have on the 20th of July, building permits, housing starts 21st, which is Wednesday, crude inventories. Thursday is initial claims, jobless claims, and then Friday, looks like Thursday, we also have existing home sales and leading indicators. So it's a little sparse on the economic front, but you're going to have some key data there. Ultimately, it's all about earnings this week. Be ready. The volatility is going to be here and be rocking. All right, you're going to have stocks like Texas Instruments report, Apple report, Goldman Sachs report, Yahoo, Pepsi, you name it, Qualcomm, Morgan Stanley, Coke, Wells Fargo, 3M, Amazon. I mean, it is going to be a huge week this week. You want to get on board. Let's make some money. We've had some unbelievable months overall, just making money hand over fist. It's going to continue. Be ready. Let's do it this week. Join the Research Center. Join the chat room. I'll see you this week. Take care.